Hi everyone, this is Rohit from Lifestyle Mastery, and today I'm excited to have Eugene Malobrodsky, who's a managing partner at One Way Ventures, where he focuses on finding the best founders in B2B SaaS and AI companies. At One Way Ventures, he works very closely with companies such as Hercules AI, BuddyAI, Truckpedia, Helm, among others. Welcome to the show, Eugene.
Thank you. Thank you. I'm happy to be here.
Awesome. So you do have a very interesting journey from Lithuania to US, and that's where I think and I've spoken to Simeon for a summit I did in 2020, um, and and the thesis of the fund is about focusing on immigrant founders. So that is very interesting. But let's talk about your journey. How did you get into startups, and how did your journey come from Lithuania to the US?
Sure, sure. So, my journey, I was born in Lithuania. Both parents are engineers. Mom is computer science. My dad is mechanical engineer. And we basically, like the journey, I mean, from a Jewish family, and the journey was like, okay, where do we move? It's either Israel or the US. And we had family in the US, and we basically, my uncle, who's immigrated here earlier, worked from for now it's Cisco, but back then it was Stratacom Systems already, and that became the Catalyst routers. And basically, he said, "Oh, you guys have to come here." And I was 13 when we immigrated from Lithuania straight into Silicon Valley. But for me personally, I was always an extrovert, so it was easy for me to find relationships and like build relationships. So, but I fell in love with computers, especially like the black and white screens of the laptops in those days. We're talking about like early 1990s, um, and I understood kind of maybe in the back of my mind understood that that's kind of the areas where I want to be in. And when we got here, my mom went straight into work in her field, and dad did not know English when he came, so he had to learn English and was working at a store selling professional cameras for photographers. But mom knew English and everything, so I went into middle school. I had always an entrepreneurial spirit. So I was
Right.
like, okay, like rules are there, they're great, but how can you make the rules kind of bend to what needs to be done for me personally?
Right.
And basically, I started my career at 15
Okay.
and started with working for startups and working first as a junior QA, basically manual testing, and then became system administrator at another startup. Um, After that, I went into sales at asset management company, and
Mm.
then I understood like all these people, they tell me what to do, how to do it, and I'm like, I can do this myself.
Right.
So, and this is when I started my first company with my partner, who at that time worked for Remedy uh, Corporation that became BMC.
Right.
Uh, and we basically took credit cards and started buying IT assets and then selling them to newly funded companies. That was the first business. I was 20, like 21, 22, something like
Mm.
that. And so basically, that was the first company that I built. I felt okay. I kind of we called the shots and we hired people and grew the company. Eventually, when we started building that company, the issue back then was we're talking about like early 2000s, and the issue was there was no place to work outside. So like Starbucks or other places did not have Wi-Fi because the coffee shops were always thought by the coffee shop owners like you come there, you do your work, and you buy your coffee and you get out. You don't sit there on your computer.
Right.
So, so the idea was, to some extent, born even back then. Is like, oh, we want to build a company where we're democratizing access to the internet,
Mm.
and but we cannot do it now. So this is the future problem that we want to solve. So, anyways, we grew. The company was called Intelligent Buying. We grew the company. Um, we took it small cap public and then sold it as a public vehicle. And at this, by a while at the same time, starting the company that pretty much took a lot of my life. I started with my it was the same partner. He was the CEO. I was between the CTO and COO of the company, where we basically started the company was providing democratized Wi-Fi access and creating cities that were wireless. That's where the first idea came, and we were
Right.
basically creating Wi-Fi zones that were full downtowns. We were one of the first ones to do it, or the first ones to do it were San Francisco, Palo Alto, and like a bunch of places where you can just go, sit on the bench, sit in the coffee shop, and just access internet. And what we have realized that, first of all, the equipment is expensive, maintenance is expensive, and all that stuff. So we raised money for that from amazing investors like Burt Roberts, for example, who was a former CEO and chairman of MCI, and basically started building that out. Understood that making that business profitable was extremely hard.
Right.
So we decided that we want to bring another product that people, while they're at our hotspots, can take with them.
Right.
And we created the first product, the first consumer VPN product called Hotspot Shield that we brought to the market. And that product was the first company, we were the first company to actually create a consumer version of the VPN that was to create privacy and access, and really democratizing the internet, and in the future basically being the ones who democratize the internet globally, and not in necessarily only in Wi-Fi spots, but globally, by helping people in Egypt to get access to the internet, and help them bring down the government, and changing the government, and really helping people bypass censorship and getting access and getting their words out. And
Right.
that was a long journey. It was a 15-year journey. That
Right.
was incredible. It was ups and downs and everything in between.
Right. Right. Yeah, I mean, with Anchor Free, uh, you were there as the chief strategy officer, and you secured,
Yeah.
yeah, funding from for vendor company, So, so how was the experience, selling the company and then exiting out?
Uh, so after 15 years, you kind of, I kind of felt that I want to get out, but at the
Yeah.
same time, it was exciting. You get an offer for an acquisition. We had two offers, and or actually it was an investment into the company, but it was a majority acquisition of the asset of the company. But uh, at first it was exciting going through due diligence. It was long, but it was like, very. I was like, okay, this is something is happening.
Right.
But the day after I signed, I started having, like, it was like one of those, like, oh shit, and I started having regrets. Because it's like your baby that you've been
Yeah.
babying for 15 years, and all of a sudden you gave it away,
Yeah.
and and that was one very hard thing. The second hard thing for me was um, really dealing with the fact that you're still working,
Yeah.
right? But you're technically not in control anymore,
Mm.
and
Right.
not in control of the company, but also not in control of the people that work for you.
Mm. Yeah, so the interesting thing is, like, you joined one way as a managing partner. Uh, a lot of founders, when they build something, they would want to keep building, so especially in the last couple of years, I've seen the second and third time founders. In fact, a lot of VCs are looking out for second or third founders who can come
Yes.
and they would want to back them. So
Yep.
once you got an exit from Anchor Free, did you want to go back to build? What were you thinking about, getting into VC? Why was that the decision?
Yeah, I think partly so between the first company and the second company, it was 17 years.
Right,
And I did not have a gap year, gap 6 months, or gap months. It was
right,
basically flowing from one company into another.
right.
So doing it for 17 years, and you know, some founders that I know like been lucky or found a way to not do the 12 to 16-hour days. I even though we were like big, I mean, we had over 200 employees globally and the profitable and large revenues, but I still dedicated huge amounts of my time
Yeah,
to the company, and I see some other founders that are like doing some work where they create the structure in a way where they can like not really be there,
yeah,
right? And I never been able to do that. So for me, after 17 years doing it, I was like, okay, I'm not really ready for another 12 to 16-hour days.
yeah.
But the knowledge, mistakes, and the learnings that I got, I want to pass it on
Mm.
to others and help them achieve what I have achieved,
Yeah, yeah,
or even more.
yeah, yeah. Absolutely. I think so. It's been couple of years since I spoke to Simon, but why is the fund's focus on immigrant founders? I know immigrants are a completely different beast, right? But why was the thesis only for immigrant founders?
Yeah. So going back, so how I met Simon.
Yeah,
So first I joined as a venture partner because I was still working at Anchor Free. Uh, when I was starting to think what I want to do, so many people from different countries around the world to work for me, or hire people locally that are immigrants themselves. And the grit, the hard work, and the loyalty to the company was off the charts.
yeah,
And I wanted to kind of support that grit on.
yeah.
So, and we have actually one company that invested, that's my former employee.
Mm.
Um, but uh, I met a friend of mine who's a founder of PetCube,
Yeah,
and I was like, well, I'm thinking of the next thing, building my own fund. And he's like, "Oh, my angel investor that invested in me just opened a fund like that." And that's Simeon, who was a managing director of Techstars, and then opened One Way. And he's like, "You guys should definitely just talk." And so he put me in touch with Simeon, and I said, "Look, this is what I'm thinking." And Simeon was like, "Look, this is a long journey. This is like a commitment of like 10 years, and
yeah,
you need to be ready for that." So like, yes, you're thinking that you want to start this and do this and stuff like that, and you probably will raise money for the fund and so on, but this is a commitment. How about you come in as a venture partner,
mm.
see if you even like it,
Yeah,
see what it's like, and then you can leave and open your own fund. So that was midway of Fund One for Simeon that I joined,
right.
and basically invested in multiple companies and a Fund One as a venture partner. And then when we started raising our second fund, I basically was Simeon said, "Hey, how about you just join as one of the managing partners uh, and do this with us, build
Right,
this." So we successfully raised our second fund in like in 3.5, 4 months,
right.
uh, and the whole premise is for us is that we believe, and the statistics show that immigrant founders have extreme grit.
Right.
They have they're fairly frugal. They
Yeah.
understand the value of the capital, and they're giving up so much by immigrating to the US. They're leaving behind families, friends, houses, apartments, whatever, uh, to come here, and they just can't afford to fail. Because
Yeah.
if they fail in the company, what was the reason for them to move?
Yeah.
So if you take that into account, if you look at statistics, over 50% of the unicorn companies today are founded by immigrants. If
Yeah.
you're looking at Fortune 1000 companies, there's 80% of them have an executive who is a first generation immigrant.
No.
80%. Crazy.
No.
So the hardship that they have when they immigrate here is the connections. Where do they go? Who do they meet? How do they grow the business? Not because they can't build the products, they all can build products, but like they don't have the network. This is the benefit that the locals have.
Yeah.
So, and us being local, I mean, I've been here 30 years, majority of my life.
Right.
Simeon has been here since late 70s,
Oh.
and our third partner, Lex, has been here for also since he was in college, I think. So we're happy to help those
Right.
companies to get to the next level. Not only uh, help them with the company itself, but also how do you present it?
Right.
How do you we introduce them to investors? We help them with introductions to connections. And I also started a Pathfinder network, which is an advisory network within our fund that consists of founders that built unicorn companies in the past,
Nice.
uh, or currently running them, who are they love what we do, the mission, and it's a way for them to give back, of basically being able to spend the time with our portfolio companies.
Mm. Got it. Interesting. And yeah, some of the points that you mentioned, it completely resonated with me because I didn't immigrate to US, but I did move to the UK, did my masters, and I think the first couple of years I really did struggle. So somehow I feel, and somebody made a very interesting point that you have to work twice and as hard to be at the same level because I got a weird accent, I look so different, out of the place. So I can really understand why immigrant founders or operators, executives need to really work hard.
Yep.
So that's pretty insightful. But especially in the last 2 years, what has happened is like if you look at pattern recognition, you look at which B schools did they go to, if they worked at McKinsey, Bain, or they worked in a big startup and all that. To what extent do you think pattern recognition is a good thing or is a bad thing?
So if you worked, let's say in McKinsey,
Yeah,
you're probably very good analytical,
yeah,
and you're very good at operations. A lot
right,
of them are.
yeah,
Um, it's a skill that they learn that can help them.
right,
If you're talking about pattern in terms of universities, okay, if you went to Stanford,
yeah.
uh, MBA, it's the network that you gain, not necessarily the skills. So, or Harvard, same thing. And I'm not saying that you don't get the skills. Like these schools are freaking amazing,
True.
but the power is in that network that you get afterwards. That
Mm.
it's almost like the bros.
Yeah, yeah. True, true.
But so they do have an upper hand
Right.
a little. Uh, but I think people that just come here and are extremely hungry, uh, those people I think are sometimes overlooked.
Mm. Correct. And do you prefer to invest in, outside of founders who are approaching a problem with a fresh eyes, or insider founders who know the problem back to front. For example, I work with Oyo Rooms where the founder said that he would not want to have the founding team from the hotel industry. So we had a lot of management consultants. We have people from different backgrounds. I came from a SaaS background working for this, a Decacorn. But what really works? Would you want to invest in outsider founders or insider founders who've got a lot of uh, information?
So obviously, you want a founder that knows the industry,
Yeah,
uh, whether he worked in it
yeah,
or he deeply, deeply understands it.
true.
But it's not like you don't have to be straight out of that industry.
Mm,
What I think is it does, by the way, it does help as first customers and all that stuff. For those guys, it's a lot easier to get. I think that a lot of times, well, one of the benefits of why building a company, let's say in the US or UK, for example, is the
yeah,
diversity.
yeah,
I think when you have the diversity in your company of not everybody thinking the same,
yeah,
uh, and having different backgrounds, different sexes, and different cultures, all that stuff, it creates kind of a way to think broadly.
yeah,
And I think that's the key. In a lot of like when you're building a company in some of the countries in Europe where it's no immigrants, it's all the same.
yeah,
I think it's the successes. It's a lot harder to reach because
mm,
you kind of have this bubble.
yeah,
We have a different kind of bubble in Silicon Valley, but it's we do have a diversity of thinkers.
right, yeah, correct. And um, especially when you're doing an investment, do you think about who would do the next round? Do you look at, especially when it comes to really early stage investments? I do get influence if Sequoia or Tiger or SoftBank is leading, but is that something which is it's something you look at?
So yeah, so I mean, when we're looking at the company, we need to understand total addressable market of that company.
Right.
So I mean, for us, number one thing is the founders. We invest early stage. We invest like pre-seed and late pre-seed or seed. So pretty
Okay.
much, let's just say seed. That's
Right.
kind of the majority of our investments. And we really looking first at the founders. Are these the founders that can actually build a big company? Are these the founders that are going to be there building this? Do they know enough about their market? And do they have enough grit that if the idea today doesn't work, would they be able to pivot?
Yeah.
Because a lot of times founders get stuck in the belief that this initial idea is the idea,
Yeah.
and it takes a lot of grit and a lot of mental uh, kind of understanding that okay, you need to just put this on ice and do it differently,
Mm.
and not everybody is capable of doing that. But a total addressable market, if it's large enough, we obviously identify. We want to understand like okay, if this KPIs are achieved, who might be the next people that will invest, the next fund that
Okay.
invests in the next round.
Right.
And we actually help a lot uh, to the founders to get their Series A.
Okay. Okay. And you also lead those seed rounds, or are you?
Yeah, we lead about, I would say we probably lead or co-lead about 70% of the time right now,
Okay.
maybe
Okay.
75.
Got it. Got it. Interesting. And how important is ownership for you? Do you look at, like, is it possible to own 20% of the company at seed stage?
I mean, it's possible to own 20%. We have a few companies where we own that kind of percentage, but
Nice.
majority, like we try to get between 10 and 12%. That's
Okay.
like our sweet spot.
Okay.
Obviously, on some companies we have less, but I would say between 5 and 15% is kind of where we want to be.
Oh, okay. Got it. Interesting. And especially, Eugene, in the last 2 years, a lot of emerging managers have really struggled a lot, right? So I've got horror stories, and in fact, um, you know, I'm hearing a lot on Twitter, like a lot of VCs are being pushed out of the VC industry, or they're leaving the VC industry, and I don't know, maybe they're becoming operators. I don't know, but who do you think are the most important new LPs who want to enter the new venture market in 24 and going forward?
I think the difficulty was that a lot of newer VCs,
Yeah.
the NTPs, they fell into the FOMO investing,
Mm,
where the valuations were extremely large and
yeah.
overinflated, and a lot of them deployed most of their capital at that period of time.
Mm,
And that's where it gets difficult
yeah.
to raise your next fund or things like that. So, I mean, our pace of investments was the same. Uh, we did not do the FOMO investments. We stuck to our like here's the valuation. So we basically, in order not to fall into the valuation gap, so we basically said, okay, let's just do some great like pre-seed deals instead of playing the seed at like 30 million, 35 million, $40 million valuations, you know?
Right.
Um, so we basically said, okay, let's do pre-seeds.
Okay.
So sticking to kind of the rigor of still doing diligence. A lot of deals were also done without diligence at that time. We basically continued on our strategy. Did we do a few investments that we shouldn't have? Of course, just
Yeah.
like anyone else.
Yeah.
But we really uh, worked on continuing the strategy that we had.
Got it. And who do you think are the new LPs who you think would be coming onto this market? Um,
The new LPs are primarily, I believe, are the people that exited their companies,
oh, okay.
or there was a lot of money deployed on the secondaries into
Mm,
some of the companies on high valuations in 2022, 21, 22, that were able to sell 10, 20% of their ownership to to the investors and get some money off the table. And I think those are the people who would come in new as LPs to the market.
okay, got it. And you mentioned something about secondaries, I was wondering, what are your views on founders taking money in secondaries, especially, if they just raise Series A on Series B, and when do you think, they should be allowed to, make an exit on secondaries?
Yeah. And each situation is different. So I had a secondary in my company
Oh,
as
nice.
well. I think that if the journey is long, I think having a little bit of capital that you take off the table. So now you're no longer thinking like worst comes to worst, you say, I don't know, you have $3 to $5 million
Mm,
that you don't have to think about like, oh, I need to buy a house. Oh, I need to be able to afford daycare, whatever it is, right? Or private school for my kid, whatever it is. Uh, Having at least a feeling of more freedom and having a little bit of liquidity allows you to continue on and invest more time to build an actually big company.
mm, got it. And
Because before that you're thinking, okay, I want to exit so I could have like, some money and then I can start another one.
yeah.
No, you don't have to exit to have some money to start another one. If you think that this one could be the next Facebook, like get like some money out and build that Facebook.
Mm, right. And especially for listeners, who would want to start, when do you think, because they sometimes have a very naive view that, first 3 years we're going to struggle, and then we're going to get a big exit, and we're going to, take an exit from secondaries. But in your view, because you work with a lot of founders, when is it that the secondary really comes into picture? Like, is it like
Usually Series B and above.
serious beef? Okay, got it, got it.
I had a secondary in Series C, but we didn't really have it. Back when we were raising, there was no such thing as seed.
Oh,
It was like A, B, C. So technically, in today's world, it would be like B.
B. Okay, okay, got it, got it. And
And also, the founder needs to be comfortable at that price to sell some of his shares.
yeah, yeah, true, true.
But I don't think there is anything wrong with a partial liquidity.
Yeah,
Uh, Obviously, if you're trying to sell like half of your ownership, that's a red flag.
yeah, yeah,
But I think if you're selling 10% of your ownership, is
yeah.
totally fine.
It's totally fine. Yeah, makes sense. And especially, we started saying, obviously I'm from e-commerce SaaS, so we have had Klaviyo's and few other IPOs coming on, but there's been a closed IPO window in the last couple of years, and the lack of M&A. Where do you think the liquidity will come in the next 24 months for a lot of SaaS companies, because that's where you focus on?
Yeah, it's a good question. I think majority of the liquidity nowadays would come from the M&A from the publicly traded companies.
Okay.
I think valuations are just so large on some of the public companies, like the Nvidias and Amazons and Microsofts and so on and so on and so on, that they can basically acquire additional companies for fairly cheap. Because so valuation of private companies have compressed. The valuations of the publicly traded companies now are, uh, expanded, so they have more buying power. And I think that's where majority will probably come from,
Okay.
liquidity. And I
Got it.
already see that. I mean, in the network that I run, we have multiple exits are in the works,
Right.
and only like one or two pre-IPO kind of the conversations.
Oh,
So
interesting. Yeah. And also, Eugene, you also invest into AI and ML,
yeah,
companies. Any?
yeah. So our main focus is B2B SaaS,
Yeah.
fintech, health tech, and deep tech.
Okay.
And AI basically is on all of these, right?
Yeah.
Be in all of them.
Yeah.
Uh, so it, this is kind of the main driver, those categories.
Right. Right.
We have a few that don't fall into those categories. We have some uh, companies in consumer. We have
Okay.
a few companies in like construction tech, so prop tech.
Okay. Got it. Got it. And obviously, I abstain away from politics, but this is an interesting year, right? We have elections in India, and also in US, and I want to talk about Donald Trump. I know he's quite a divisive personality, but what if he comes again? Would you think Trump administration will open up more M&A markets because of the business acumen of Donald Trump?
The issue with Trump is what he says and what he does don't match at all.
Yeah,
So he is a very like all politicians say one thing, do another thing, but he's like doing the completely opposite thing.
yeah,
So it's very hard to answer that question. But generally, Trump will try to reduce taxation for corporations,
mm,
so which is good for the economy internally.
yeah,
Uh, on a global, um, I do have concerns about immigration with Trump
okay,
uh,
yeah,
because I don't think that he realizes that U.S. has been built on immigrants coming to the United States.
Yeah.
Like he doesn't really grasp it, or maybe he's just listening to the people who are voting for him and just acts on it. But my belief, personal, is the one thing that U.S. can do is if you have STEM degree,
Yeah.
you basically just come. There's no limit. Like we
Yeah.
want those PhDs, we want these scientists because
True.
those are the people who are going to make US more competitive.
Mm.
I also strong believer in like if we're been able to provide uh, if we've been able to provide education for these international students that come here,
Yeah.
why the hell would we not do everything in our power to make sure that they stay versus saying, oh, okay, you can like get some experience here, but then you have to go back. No, like we want you to stay. Like we pretty much invested in your education. We want you here.
Yeah. Yeah. Yeah.
So those things are extremely, I think, important in my view, personal.
Yeah. Yeah. Interesting. Also, I'm Indian, so we have like H-1B quotas for Indians, and
Yes.
now I understand that we just so many of us like Indians and Chinese, you can't just open it up for all of us. But I think you made a great point about STEM degree. So if you're an immigrant, you have a STEM degree, you've done your PhD, I think, and that's where a lot of opportunities and avenues open up. Um, and do you think would your view be different for M&A markets if Biden comes into power?
Truthfully, I don't want both of them to come to power, but that's subject. Uh, you know, I think Biden is going to be continuation of what we had over the last four
Okay,
years. I
right.
mean, the good thing on the Biden side, he's a centrist,
Yeah,
and this is going to basically just continue on as it was the last 4 years.
got it. Interesting. Um, also,
Which stability is always, to some extent, stability is always good as well.
yeah, yeah,
There's
true.
no swings.
Yeah, yeah. That's. I mean, the thing about UK is it's the last 5 years have been, we have had four prime ministers,
Yes.
but I'm Indian, and I've seen the last 10 years we have had the same prime minister, which is Mr. Narendra Modi, and we've seen that stability in the Indian economy. So I totally agree on this point. Even though I don't understand too much about politics, but moving on, Uh, especially with emerging managers, what advice would you give on when to sell and when to hold? Like I heard in one of the podcasts from Fred Wilson from USV, who said he keeps 33% hold. Then he has this equation of 33% to 33% to 33%, which is to hold, to sell, and to partially exit or whatever. So what advice you give to emerging managers on that?
So for the emerging manager, the advice is if it all depends on a few factors. One is where are you in the life cycle of the fund?
Right.
And also, if you have winners, you should probably hold on to those winners
Yeah.
unless you're overly exposed on those winners, and then you can basically sell part of it.
Okay.
Um, but I think that the other factor that if you're losing trust in the founder, even though
Mm.
the company is doing good,
Yeah.
but you don't trust it, you should get out.
Mm. Got it. Got it. Interesting.
I think that if you, it's that kind of fine line that you have to walk.
Yeah.
But look, end of the day, it's for us, it's all about returning the capital to our investors
Yeah.
and providing them additional and providing them the returns, right? So we been entrusted by those people to deploy that capital, and we need to make sure that we also understand when we have to actually put our foot down, protect that capital, because we feel there are risks, and if there is too much risk, you get out.
Mm. Yeah, yeah. Interesting. Before the call, you mentioned about uh, a founders retreat that you had been to in Mexico, and a follow up on that question. I was wondering for a VC fund, who is the customer? Is it the LP or is it the founder?
My retreats is a separate project that I have started.
Okay, okay,
That's bringing founders
nice.
from all over the world
Yeah,
to come together and share ideas and build a relationship with one another,
nice.
and also help solve each other problems, whether the personal or business, or at
Mm.
least provide uh, things to think about,
Okay, okay,
and potentially even build bridges, build businesses together, and things like that, right?
right, right.
But it's more about building a relationship and a community
Right.
of successful founders.
Mm. Current. Yeah. I quickly want to do the top three. What's your favorite business book?
Um, I think that my personal is 0 to 1
Yeah,
is one of my favorite ones. Um, and then Mark Hard Things About Hard Things.
yeah.
Um,
Love that book. Yeah. We'll
I,
put that on.
when I was reading that book, I was like so many like things that are like, oh my God, we had exactly the same situation.
Yeah.
So that book is like like really resonated with me.
Yeah. No, absolutely. I think a lot of founders on the podcast have also shared the same thing because it's really hard. It's like chewing glass every day is
For sure.
is the way he put it was wonderful.
For sure. For sure.
Yeah. If you could go back in time when you started investing in startups and you started your journey with One Way Ventures, what is the one thing you would have focused on or done anything differently?
Oof. What I've done differently. I think sometimes the decisions I would make are completely gut based, which I would not discount. I think gut is a huge thing.
Yeah.
But sometimes I was making decisions too fast. Yes, we have the whole team that would, but personal decisions were like, okay, you should have done more diligence, more, and like deeper diligence.
Correct.
Um, that's probably the one thing that I would have done different. But other than that, I think one thing as a founder I would have done different.
Yeah.
So when I was building a company, I did not join like the retreats that I've done
Mm,
or some of the other like events where founders come together and share their learnings because I was too focused on today and building today. And I would have probably, and I started going to those when the company was already late stage.
mm,
And I think that that was a mistake because I could have done a lot of shortcuts by learning and talking to these people who are already successful.
yeah. Yeah.
So that thing I would like, I'm not saying like go every quarter, but at least once a year,
Yeah.
you should find that place where you can meet highly successful people
Mm,
and for them to, and for you to share openly your problems and help them potentially solve them or
mm.
give you ideas of how to solve them. Share their expertise.
Got it. Got it. Interesting. And do you have a very favorite online tool, for example, Gmail, Slack, Zoom?
Uh, I would say Airtable and Zoom and ChatGPT.
ChatGPT. Yeah. Got it. We'll put that
Oh, actually, I like Grammarly as well.
Grammarly. Okay.
Grammarly AI.
Got it. We'll put that in the show notes. And Eugene, what is the best way people can reach out to you and know more about One Way Ventures?
Sure. So they can reach out to me on LinkedIn, for example,
Yeah,
uh, or they can email me at eugene@onewayvc.com.
got it. Well, we'll put that in the show notes. Eugene, thank you so much for taking my time and
Thank
speaking
you.
to us. I really enjoyed my conversation with you.
Same here. Same here. Thank you.
Yes.
Bye bye.